Okay, everybody. Normally I don't do Q&As this early, but there's not a lot going on in the market. As you can see, the market came off of this 350 level yesterday, this weekly resistance area. It's down about 100 pips. Remember, last night I was talking about the market coming right down into this double bottom here. And this is going to be a critical point. Okay? Now, I want to make this one, well, you know what? I'll make this comment now, and hopefully I'll remember to make it later. But what just occurred to me is how can you tell that the market is going to retest, meaning it's going to come back up here into resistance and die off, versus just punching through? Well, really the answer is very, very simple. Let's look at this past double bottom. Okay, the market makes a double bottom. What you have to look for whenever the market gets to a support point or a resistance point is, does the market make a wide range here? If it does make a wide range, then the likelihood of the market breaking through is high. Okay, now remember I said the likelihood. That means the chances, the odds. What that means to me on a practical sense is when I see big bars like this, I want to watch out. And remember, this is a 240-minute bar, so I can go down to an hourly, I can go down to a 15-minute and really zero in on what this looks like. But this 240-minute bar gives me a good picture of the way the market is moving. So I want to look for big bars, okay, when it gets down to a double bottom. But more importantly, as the market is reversing, I want to look for big bars as well. So the key is in looking for big bars. You can see this one big bar punched through all of this overhead resistance. Okay, the market just knifed right through it. So if you were looking to go short and you're thinking, okay, the market came up here, resistance, it's got a lot of resistance, it's starting to move down, so I'm going to wait for the market to come up here for the little dipper and I'm going to go short. Well, this big bar should give you pause. And you should be watching out for increased momentum. At the very least, you should be watching for a 3-bar reversal as the market comes up into this level. Okay? I just wanted to make that comment since I saw it on the chart. Okay. One of the reasons why I wanted to do the video so early today was because I actually heard back from Dick. I didn't expect to get a response this quickly. I think it's wonderful, though, and I appreciate it. So let's take a look at this challenge now, this gauntlet that I threw down yesterday. So Dick says the number in particular that I believed was an unreasonable expectation, and I love this. The capital letters, unreasonable expectation, was your average dollar win, which was 75 in the first example. Now I want to stop right here before I go on. Now, one of the reasons why I was initially perturbed was because of the numbers that Dick was using. Okay, now if you go over my examples in the course, I was trying to remember what disc. I think disc number 3 and disc number 5, but surely disc number 5, where I go over examples. Let me just say this. The reason why I got perturbed was this. If I have 8 mini lots on, and I take profits, and I net 20 pips out of that, what does this equal? Well, 8 times 2 is 16. Add a 10, $160. Whoops, the regular session is starting. Well, look at this. $160. Okay? Well, you know what, Dick? So much for your unreasonable expectation. Okay? That's why, more than anything else, I got perturbed. Because you're telling me that $75 is unreasonable,